Once you have investment, it will serve you, it will serve your generation unborn. And this is the secret of the wealthy. So you need to. There are a lot of organizations that are stockbroker. So now where are you going to get them? You are going to get them on NGX websites. That's for Nigeria now. That will be Nigerian Exchange. For UK here now, that will be London Stock Exchange. If you are in US, that will be New York Stock Exchange. So every country has stock exchange. On their website, there will be part of it that will list the stock brokerage firm that have been licensed. So you look for them, you open your account with them. So what are the things you need to consider in opening the account with them? You need to consider how much are they charging. How much are they charging is very important at long run. Take for example, let's say they are charging 1% management fee. 1% of 100,000, that's 1,000. So if you have 100 million on it, that's 1 million. So you need to know how much they are charging. Yes, that may not really be the ultimate, because at long run you will make money than that 1%. You understand? You won't even feel it, but it's part of what you need to know. Another thing which to me is most important is having a very customer service oriented organization to work with. Not all of them are that friendly, but some are. So, and how can you know that one? You can only know those ones by a referral, maybe from friends, those that have had their accounts, those that have moved on from their accounts, because you can move your accounts from one stockbroker to another stockbroker. It's just like sometimes we can say, okay, this bank is not good for me. I close down my account, I go and open it in another place. So you can open another stockbroker's account, then you move everything you have in that place to the new one.
Okay.
So move from one organization to the other until you get what you really want, or at least comfortable with. So once you open your account, you begin to fund it. And like my own experience when I started, I could remember I started with just 15,000 naira. Owó yẹn gan, it was a loan nígbà tí mo fẹ́ ṣe ICAN. I wanted to do okay, Mara, I wanted to do ICAN then, and the bank came to our organization where they can give loan to staff. So that was how I took advantage of it. And I think the exam then was around 35,000 naira. So it remained like 15,000. That 15,000 naira, I pour it into stock. That was how I started. That was how I started. So, and one, like I said, people that started around that time, they've retired on this topic we are talking about. And one prominent one was the person that started. I think he started with 3,000, I think, even around that time. Don't forget, I started with 15,000, even though it was a loan. And funny thing about that, that loan now, I still have it. As in that money now, I still have it, because that was the moribund account. Ṣé yẹn lè rántí pé òun gba 50,000 kan, or gba salary 50,000 kan like 15-20 years ago? But because it's an investment, I'm still having dividend on it.
Yeah.
That's the advantage of having all this conversation. Owó téèyàn kó sí saving èèyàn ti ná. But once you have investment, it will serve you, it will serve your generation unborn. And this is the secret of the wealthy. So there's like 1,000 in the hand. Like 700 every month is going into investment with eyes closed. With eyes closed, and that person did it for 10 years. Every other thing that remain, we want to go to Sainsbury, we want to buy shoe, we want to buy clothes, 300. And after the rent and the like, maybe the other partner take care of food provision and the like. And they close their eyes 10 years straight. The stock is going down and it's as if they are losing money. The account is in red. But all of a sudden, boom, 1,000% increase in capital appreciation. That's how it happens. Apart from capital appreciation, which I'm going to tell you what capital appreciation is, the dividend keeps coming and it will not stop. What we make dividend to stop will only be if the organization dies or the owner of the account did not mandate the account to receive the dividend. And even with that, the day he or she mandates it, every backlog of the dividend will come into the account and be paid because they are never lost. And if the organization dies, or let's say they take over or merge, majority of the time they will pay the minority shareholders. So return the money and the capital appreciation as at the time you've bought it till the time they say, okay, maybe we want to sell this organization and this is your investment with us. So majority we hardly see account that will not be paid. Or like, let me give you an example, because we will always be going back to the background of my starting. So from those for that my portfolio now in 2011, there are like 4 5 stocks on it, and one organization is no longer in existence. That's a very good example. The organization that is no longer in existence was one of the Nigerian bank that was taken over by Amcom.
Yeah, yeah.
So the day that Amcom settle everything and maybe they make it live again or sell it to interested buyer and the like, everything about my investment in that place get alive again. But if it's money or the bank that dies, the money is gone.
Yes.
But
Confirm.
not for investment majority of the time. Occasionally, all those risks could be there, because that's why risk and return is important in the conversation too. But if someone is an investor and not a trader, who is an investor? An investor is a person that is looking long term, not short term. And you know what? Even short term, many times one can make money. Even though an investor should not be like that, it's a trader mindset. A trader will look at the organization's stock in the market and say, okay, it seems the next 2 weeks this stock should go up by 10-20% with the news that is out and how they are doing. So when they go when this stock go up by 15%, I'm going to sell it. So I'm going to buy it now. I will sell it. It's as if it's going to move for like 20%. Once it's 15, I will sell. So that it will not reach that it's going up and just crash down again. So that's a trader. They will just look for a margin of safety, capitalize on it, put their money, take their money, and have their gain. But an investor overall will always win, because that's organization that they see now that will go up and quickly come down again, which definitely majority of the time will be. But for an investor, we don't even need to worry ourselves about it's going up, it's going down, because I'm not investing for now.
Yeah.
So, but at long run now, an investor will have his or her dividend, and at the same time, the organization will keep the stock price will keep on increasing in manifolds. Let me give you a recent example now. I bought into First Bank when it was 47 naira. I'm talking about maybe like 4 5 months. Apart from little one that I had before, but when I get serious, I bought it at around 45 naira. Do you know, as we speak today, is I think maybe around 125 naira.
Wow.
This is a fact you can check, you understand? And we are just talking about this year. So sometimes it could happen like that. Like this one that I'm talking about, every other amount that is on my portfolio now, they are my profit because I've pulled my capital out of it already. That one now I've traded on it. Don't forget I'm an investor, but I've traded on it, and I have some of my reason, which I will not want to go into now to
Yeah.
complicate to complicate it for you. We are just starting, we are just introducing. So as an investor, sometimes you can trade too because you have skill too. But ultimately, you are an investor. That is, you are living like a trader now will not leave money there. But I left all my profit there. I only took out my capital because it has appreciated. I think today when I checked it, it has appreciated like 172%. Can you see within 3 months, 4 months, 5 months? Which bank will pay that?
No.
I understand. Now imagine one is just have 1 million, or let's say 2,000 pounds. That's all he or she has. But that 2,000 pounds is making 200% of it every year without working. That's why sometimes you see some people living some flashy life and we want to join them. What we don't know is that there is a structure in their life. They are only spending from their increase and profit, not the 9 to 5 job salary like we receive today. Are you getting it? So they, like as we receive now today, everything is going to their investment. We are talking about stock now. Some people are landed property oriented, some people are into business and the like, but it's going into investments. They will not take it out. They will only live on the dividend or the profit of that investment. But we will use, or people, because me, I'm no longer like that. But we majority of people, workers all over the world, this is because like in the office today, they are already money has not landed, it has not landed, and it will be paid maybe overnight. Once it's landed, it's scattered to different expenses. But the people that are really investing will close their eyes, take junk into their investment. They will only yield. That's why when they are starting, they will look as if they are poor. Because let's say at the end of the day, an investment of £2,000 can only generate maybe £100 a month for them, and they want to live on that. So it will be so tight. But at long run, as they are pushing 1,700, as they are pushing £5,000, everything they have into it, that yield keep increasing because the capital that is working for them is increasing and compounding. So at a point now, the yield that they will be having in their investment now outweighs even the salary they will be waiting for. That's why many times people now move to become an investor and leave 9 to 7 and 9 to 5. By that time, they've amassed wealth. Hundreds of thousands of pounds, millions of pounds is working. So they don't need to sweat again or be on another person's payroll. Because now they are thinking of how to manage their own wealth.
Wow.
So that is it. That is it. That's how it works. Mi mi mọ̀ bóyá ẹ ní àwọn question kan, so I can go into specific now.
Yeah. Yeah, I think if you go into specific, my just simple question is: you said something the other time. Wait, you invested 40, which is at the parts. I've been listening to these things for years. I've been trying to read on it to get someone to understand, but you know what, these people online, everybody just want to, you just tell you the peripheral.
Yes,
You
of
said
course,
you
because
something-
it's wide. And many of them,
Yes.
they don't know it. They just want to make a video
Their
to
own
make
money.
money.
Yes. So you said you bought something for, like, assuming 47 naira.
Yes,
So that thing they used to say 47 naira is
yes,
per share, right?
yes,
So that per share. So let's say you are buying like 100 shares. So it's going to be 100 times 47, right?
correct,
Okay.
exactly.
Okay. Yeah.
So this is how. Okay, Mongbo.
So that increment, that
Yeah.
dividend, maybe I think you said it went to like let's say 100 per share. It increases over a month to like 100 naira per share.
Yes.
So does it mean the extra 53
Yeah.
naira on it
Yeah.
is your gain?
Exactly. That's
Alright.
if you decide to remove your money.
Okay.
If you do not decide to leave your money, it can go down. It can still climb more.
Hmm.
Like last week, it was selling around 105. It was around 105. I took my capital. Don't forget my average per share price that I paid was 47. I took my capital at 105. Now it's around 125. It will check today. Now it's around 125. So now, between that time I took my capital and now the profit I left there has equally increased. And don't forget now, anything that happened to that money now, I'm not losing.
You're not losing because you've taken your capital.
Exactly.
Out.
And
So-
because the company is doing well, because they release an important information going forward today to the public, they hardly will go back again to that 47 that I bought it from. Don't forget that even that 47, it was high because I have my other accounts that as at the time, maybe like 2 years ago, those ones that I have, why I've not gotten really serious again about it. The share price was maybe 12, 13, 15 naira. The same that I now have in 45 naira. 47 naira because it's the oldest bank in our country.
Yeah.
So that's how it works. We talk about share price. So share price or market price is the price at which an organization's stock is selling per day. So what is a stock now? It simply comes from English word stake, stake or stick. In the olden days, they started with stick. If you have a share of an organization, they give you like one stick to take home. Then it becomes stake. When we say something is at stake or I have stake in it.
I have stake in this.
Exactly.
Yeah.
So it means stake too. Then for modern English word, we will say we are shareholders. That is, we are holding stick. We are holding stick in that organization. So we are part of the stick or stakeholder. And it is sold per unit of the organization.
That is stock is sold by
Yes,
units.
you can buy as much as possible. Let's take for example, because this may be a bit complex now, but is good as we are introducing it. A listed organization, because not all organizations are listed, like on the London Stock Exchange, Nigeria Exchange, New York Stock Exchange. There are some organizations that are not listed and they are doing well. But for those that are listed, not all their shares are listed. Let's take, for example, the Dangote refinery. Dangote can have like 60% stake ownership in his organization. He's not selling that out to public.
Yeah.
So he goes to Nigerian Stock Exchange and Security Exchange Commission and say, okay, I want the public to have 25% of my organization. So it's out of that 25%, that 25% can be like, let's say, 10 million worth of units of stock. So those will be the one in the hand of the people in the public. So those will be the one we are buying, we are selling, and the like, because it's not trading its own in the market. So that's why every organization we have majority shareholder and minority shareholder. Every listed organization we have. So the majority shareholders, they hardly sell their shares. They could, but they hardly. So they are not the one we are buying or selling from. Is the aspect of it that have been given to outside. And occasionally it do happen that some people that are so skillful and they have money to back it up and they look at that organization and they could see that this organization will do very well and they decide to be buying, not minding any price people want to sell it. And at the end of the day, let's take for example the Dangote refinery we were using. That percentage, let's say 25% that are released to the public, it may be possible that at the end of the day, somebody has accumulated it and has 10% of it. That person automatically becomes another major shareholder.
Yeah.
So don't forget that ordinarily people outside should be minority shareholders because we are taking it in pieces. A lot of people. But it's possible that somebody just targets to buy that up. And little by little, he or she is buying it, buying it, buying it, buying it, and out of that 25% outside, he has gotten to himself or herself 10 or 15% of it. Then that person becomes automatic shareholder, majority shareholder. Because I think once somebody should have like 5% out of the stake outside, he must be listed or she must be listed, or the corporation that bought it must be listed to be part of majority shareholder.
Okay.
So that one too is possible. It's not impossible to happen, but it rarely happen, but it can happen.
Okay.
So that is how to buy it. You buy per unit. You must first of all have sub brokerage account.
Yeah. Okay.
So once you have it, you can buy it. Then how are you going to know organizations that are profitable, that if you invest, you know that your money will be yielding for you? Now we'll begin to talk about earning per share. Earning per share. Earning simply means that the profit after the organization had paid its tax. So the money that is left in the organization's hand per the unit of its share. Let's say, for example, an organization has 10 million left as earning, and it has 10 million units of shares outstanding. It simply means 10 divided by 10 equals 1 earning per share. That is 1 unit of currency. It could be £1, it could be 1 naira per share. So if an organization has £1 per share and an investor bought it at 5 naira per share, it simply means, if let's now say out of that one pound per share, the organization is paying 50% dividend. So that means 50 pence will be paid. If we now say, okay, for how long will it take that investor to have his or her £5 back? We know that, okay, 50 cents is coming per annum. So in 2 years, we will have £1. So that means it will take 2 times 5, it will take 10 years to have the real investment and capital back into his hand. Then if he leaves it for 20, 30, 40, 50 years, every other thing, including the money in the capital market, becomes profit. That's why people at a point stop to work, because their money is working for them. And that is the advantage of starting early. That is the advantage of starting early.